Hey everybody, Cowboy here. We're going to take a look at expectancy today. I actually talked a little bit about it last week, and there was one piece of the formula that was missing, so I went ahead and corrected that. And if you watch through the video, you're going to see the proper formula of how to figure out how much one can make for every trade based on all of their backtesting. And if you like this content, please stick around towards the end, and you can find out who we are, what we do, how to find us. Please like, subscribe, hit the notification bell, and also you can simply just zap the QR code on the right-hand side of the screen, bottom right, or go to www.algofactory.tech. All right, enjoy the clip. Okay, so we're going to talk about expectancy. The first thing to understand is risk to reward ratio. Okay, so when you're taking a trade, we're going to look at what happens when price goes in your direction and when it doesn't. In this case, we're going to pretend that we are risking $1,000 per trade. Okay, so let's pretend, let's just draw what price looks like. Price starts here, heads up, and goes to the top of this box. That means I've won my trade. If price heads down and breaks the bottom of this box, that means I've lost my trade. Why does this box exist? Well, let's take an example here. Let's say that I want to go long on a trade, right? I want to basically, let's just say the word bet that price is going to go up. And so let me find a place to do this that looks best. Right here. Okay, so price headed down. I think it's going to head up. I enter the trade right here, right where the blue meets the green. Okay, and I think price is going to exit up here below this resistance right there. So, and I'm going to think that price will not go below this prior bit of support. This move down is the lowest I think it'll go, so I put my stop loss below that. And I have a formula for how I do that we're not going to get into in this video. But I'm going to go ahead and say if price goes below this level, then I'm out of the trade because I'm cutting my losses and making sure that I don't lose more money. And that's part of our money management class. And that's, again, that's a different video. And that can be found over at www.algofactory.tech. In the meantime, though, let's take this example, and we find that price actually went in my direction and exited where I planned before it broke out of the bottom. Well, if price had gone below here, then I would have lost $1,000. We're just going to say that based on the way I'm doing things, I'm calculating based on $1,000 trades. And what that means is that if price goes against me and stops out, I lose $1,000. Now, price did not do that in this case. Price went ahead and broke up here, and I took profit. Now, in this long short box, you're going to see right here, risk reward ratio 1.92, okay? And all you have to do is multiply the amount you would have lost, which for me would have been $1,000, plus times 1.92, and you'll find out how much you win if you win this trade. So if I lost, I would have been minus $1,000, right? But if I won, then I would have been plus 1,000 times 1.92, which equals $1,920. So what I'm doing here is I'm finding trades that have a chance of going much higher compared to how low they could go before I have to exit, right? So I'm going to lose the most I'll lose on this trade is $1,000, and according to my trade plan, I could win $1,920, which is almost twice as much as I could lose. Now, because of that, that means I can lose half my trades and still be profitable. Okay, so this is just an example. It might be $50 for you, it might be $100. You might be a big dog and it's $10,000. It's, it all depends on your own how your account looks, right? And again, money management is a separate class. Let's go ahead and look at expectancy now, because we now understand risk to reward ratio, right? So let's go ahead and mark that out, that we get what that means. Risk to reward ratio, which is RRR, okay? Now, the next thing we have is our hit rate, which is very simple. That's percent of trades that win. And then there's our loss rate. You could call hit rate win rate, either way. Then there's our loss rate, which is the percent of trades that lose, which is going to be 100 minus percent that win, right? Okay, so what we do is we take a look based on our risk to reward ratio. We do the math to find out average win size, average loss size. Well, in this case, we know our loss size is always going to be $1,000 in this scenario, right? Because I'm only risking $1,000 per trade. The hit rate and the loss rate, let's just say I've back tested, I've done 200 tests, and I forward tested, and I have a pretty good idea that my hit rate is 65%. Okay? So we'll just actually put it here. And by definition, that means my loss rate is 35%, because we take 100 minus 65 to get 35, right? Okay, now that I have this data, let's say that my average win size is going to be based on risk to reward ratio, and let's say my average risk to reward ratio is going to be 1.2. So not that big of a win, you know, it's risking $1,000 to make $1,200 on average. You know, I prefer something closer to 2 to 1, but you know, that's not always possible. And the higher your risk to reward ratio, it tends to be that your hit rate goes down. That's just how things usually work out, not always the case, right? Okay, so in this case, we have everything we need to do the math and find out what our expectancy is. Okay, so I'm going to hit this here. I'm going to drop that right here. Okay, and I'm going to go ahead and get rid of this now that we understand these concepts. And again, if you don't understand it, just rewind. So let's move over. Let's take this data, move it over here, and now we have our formula, right? We're going to change the numbers a little bit to match this formula, right? So let's just say that my average win size, you know, actually I think I did this right. I did that correctly. The average win size, because I'm risking 1,000 and my risk to reward ratio is 1.2, happily, accidentally, maybe not, subconsciously, possibly, $1,200 is my average win size. That's just how it is. 1,000 times 1.2 is 1,200, right? So just to diagram that out to make this really clear, we have our long box, and you know, we'll say we'll move this to where it's a 1.2 risk to reward ratio. Let's make this a little more central. We'll move this data aside for the moment, okay? All right, so a 1.2 is, you know, it's like I say, it's within my required risk to reward ratio. I need at least a 1-to-1 for most of my algos, not all. But in this case, you see that 1.2. That means if price heads down, I'm losing $1,000, right? And if it breaks below, if price breaks above, I'm making 1,200, right? So I'm making more than I'm losing. So I could lose half my trades and still be profitable. The question is, will I be profitable enough, right? And that is another conversation. You have to go through and see, okay, if I'm barely making any money, is my time worth being spent, right? And that's another talk. So we have our data here, and we know it matches. So I'm going to get rid of this data that we already gathered, and we already have it here written. Okay, so you have your expectancy. And what is expectancy? Let's define that. It's the amount of money you expect to make per trade. So it takes all your wins, it takes all your losses, it factors all that in, and it's the amount of money you can expect to take home per trade. So, you know, your average win size is 1,200, right? Well, how come we end up with 430 as our answer, right? So how is it that you can only take 430 average when you have a $1,200 win size? Well, it's because of your losses. You're losing 35% of the time, and you're losing $1,000 each time. So you multiply your win rate right here by your win size, which is going to be 780. So you're winning 65% of the time. You're not winning every time, and you end up with 780. Now you actually then you multiply your loss rate times your loss size, which is going to be 350, and then you subtract your average win from average loss from your average win, right? You subtract your average loss 350 from your average win 380, and you end up with 430. 430 is your expectancy. So what this kind of means, right, to make it really simple, is that every time you take a trade, on average, you're winning $430 in this example. Okay, so for you, it might be $43, it might be, $58, it might be $358. It all depends on all these things that I just calculated. But expectancy is something where if you've done all your testing and you know your data, it's not that it's always going to be like this. It's not a perfect number, but it is a number that is accurate to a statistical degree of probability. And when you know every time you trade, you're going to, on average, take that home, even when you kind of experience a loss, you're still like, hey man, every time I click this button, on average, I'm making 430, and it keeps you in the game. And it allows you to do a lot of math, right? So, for example, if you know that you can get an average of 8 trades a month, you can multiply 8 by 430, and over time, that should average out to whatever 8 by 430 is. 8 by 4, 32 plus 240, so 3440. So that's like 3,440 a month in that example, if my head math is correct. But either way, that's expectancy, and we did have to kind of correct that because I had forgotten part of this formula when I showed this last week. So this is the correct expectancy formula. Okay, I hope you enjoyed that. I hope it helps, and I hope you're enjoying your weekend. Today is a Sunday for me, so we're just, I'm at this point trying to put out videos every day, and I had an expectancy video that I had to correct. So I got that done. Go over to www.algofactory.tech, and if you stick around right now, there's a little bit more after this about what we do, who we are, how to find us. All right, thank you. Hey everybody, Cowboy here. Thank you for joining us today. Don't forget you can go over to www.algofactory.tech. Zap the QR code on the screen. Get us on Twitter at algo_factory777. And don't forget, we help people become traders. We help also to put people on the road to creating an algorithm that you can automate if that's what you would want to do. You can walk away, trade, it's a beautiful thing. And limited time, $49.99 a month for the membership. We hope to see you there. Thanks.